You're listening to AI Prism from Seoul Economic Daily.
Foreign money is leaving Korea faster than ever. And this week's chaos in stocks and shipping lanes shows why that matters more than the headlines suggest. Foreign investors pulled a record $32.37 billion out of Korean equities in June alone. Goldman Sachs says Monday's circuit breaker crash wasn't about fundamentals. It was leveraged ETFs selling on autopilot. Trump's proposed 20% Hormuz transit fee could reprice every barrel of oil Korea imports. And Samsung is now weighing a U.S. listing of its own, following SK Hynix's record debut. It's Wednesday, July 15th. Here's why global investors are paying attention to Korea today. Korea's Kospi rallied for much of the year on AI-driven memory chip demand, pulling heavy leveraged ETF flows into semiconductor stocks. That run-up left foreign portfolios overweight Korean equities, setting up steady profit-taking even as the AI trade stayed intact. At the same time, the reopening of the U.S.-Iran conflict added a fresh geopolitical premium onto the energy routes Korea depends on. Here's what the numbers show. Foreign and institutional investors sold a combined 3.9 trillion won on the day Kospi plunged 8.95% and triggered a circuit breaker. 62% of that institutional selling came from ETF-related liquidation, Goldman Sachs found, not a shift in long-term positioning. Net foreign outflows from Korean stocks hit $32.37 billion in June, a second straight monthly record. 6 consecutive months of selling have pushed cumulative outflows to $110.21 billion so far this year, the heaviest stretch on record. Bond investors added $1.65 billion in June, extending 3 straight months of inflows tied to WGBI index inclusion. 20% is the transit fee President Trump has proposed on Hormuz Strait cargo, nearly 16 times what Iran had informally charged. That fee would raise European-bound oil freight costs from roughly $10 to $26 a barrel if it takes effect. Samsung Electronics opened early-stage talks with investment banks on a U.S. ADR listing, following SK Hynix's record $26.5 billion debut. So what does this mean for global investors weighing Korea exposure? Earlier, we said foreign investors pulled a record $32.37 billion out of Korean equities in June. Here's what that actually means for your allocation. 6 months of institutional selling without a matching earnings deterioration points to technical repositioning, not a fundamental downgrade of the Korea trade. Watch 2 costs moving in opposite directions: a Hormuz transit fee that raises hedging and shipping costs on Korea-linked energy exposure, and an ADR pipeline that could open a second channel of foreign capital into Korean chipmakers. That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a WAN IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.